It seems all anyone ever talks about anymore is margin trading. BitMEX this, Bybit that, Bitfinex, Binance, bananas. What? But it's not without good reason. They are very high in potassium. Shut up about bananas. What was initially looked at by many as just a place to service gambling addicts with the use of high leverage actually saw its popularity blow up all throughout 2018, becoming 10 times more popular than it was as versus 2017 levels. Even today, according to data from Bitwise, there is on average 10 times more volume on the derivative market than the spot market for actual Bitcoin. Of course, it's pretty easy to see why. As the market entered a prolonged downturn starting in 2018, market makers looked for ways to profit from, or at least hedge against, the falling crypto prices. The growth in the futures market came primarily from people's need to short Bitcoin. So, through leverage trading, you can do more with less, you can profit from dips even. Sounds pretty good. But if it does sound so good, then why are regulators around the world attempting to curb the usage of crypto derivative platforms? In May of this year, Japan's FSA asked Bitflyer to reduce leverage for its perpetual swap product. The UK FCA is even planning to outright ban the offering of crypto derivatives to retail investors.
Stop! You violated the law!
Warren Buffett famously said, "Derivatives are financial weapons of mass destruction and require careful risk management." And Dole famously said, "Eat like a monkey." He's not kidding. Warren Buffett, that is. This is a warning found on a popular derivative platform. Scroll down here. CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. 72% of retail investor accounts lose money when trading CFDs with this provider. Wow, that really sucks. And this is for low volatility products with low leverage. Can you imagine how high this percentage turns into when you're introducing highly volatile Bitcoin and up to 100x leverage trading?
Yo, what you doing, man? What you doing, man? What I doing? What I doing? You doing? I can't eat that, man.
But despite the obvious risks, there is no denying its immense popularity. There is currently just under $1 billion worth of open futures contracts on Bitcoin today. Now, if we compare that to the real adjusted 24-hour trading volume for Bitcoin, we can see it's much lower at 360 million. And that's actually inflated due to the very recent Bitcoin volatility we've been seeing. So I do think it's very pertinent to discuss what impact, if any, this has on the market. But first of all, before we start drawing any conclusions, either positive or negative, from the situation, it is important to say that context matters. So what is the context in this situation? As far as I see it, and this answer is going to vary depending on who you ask, but as far as I see it, we have not had newbies to this space for quite a while. Obviously, they are the first people to buy the peaks and sell the lows, getting wrecked immediately and leaving the market. There just aren't many of them knocking about anymore. There were some earlier this year, but we've mostly gone back to late 2018 interest levels again. Arguably, we haven't seen an influx of new people to this space since 2017 still, 2 years later. Bananas, on the other hand, So the people that are left right now are mostly veterans of the space, where this isn't their first bear rodeo, their second, or possibly even their third. They are prepared for whatever comes. It is in this context, no new money, no noobs, and a prolonged Bitcoin downturn that of course showcases the immense popularity, even being the preferred option, of derivative trading over actual Bitcoin trading. It just wouldn't make sense for it to be any other way right now. Whether it will always be like this or not is a good question. We're not quite sure what's going to happen when the masses do come. My point is that while this is a sign of the times right now, we don't know exactly what's coming in the future.
Whoa.
Anyway, global Bitcoin trading volume continues to slide, but it's not like it's all just going to derivative trading instead. BitMEX hit a yearly record low volume 2 days ago to the same interest levels we saw in November of 2018. The price was at $4,000. Hopefully, a bottoming out soon indicator, just like it was last November. Sentiment sure is negative, volume sure is low, both things you'd expect to find at near, hopefully, a market bottom. But anyway, assuming you just aren't too interested in all of this. You hold Bitcoin, you hold Cardano, you hold a banana. Whatever. And that's enough for you. You'd like to see the price go up, obviously. You know that the CME derivative platforms are bad. They inflate Bitcoin well beyond the supply of 21 million, so it's not a scarce asset as far as they're concerned. But what about BitMEX? What about Bybit, Binance? Everything begins with a B, Bitfinex. What about, no, shut up, is people trading perpetual contracts, futures contracts, aka margin trading a derivative of Bitcoin on platforms like these, with ever-increasing popularity, actually a bad thing for Bitcoin? The short answer, pun intended, is no. The long answer is no? Surprisingly, it's not so black and white. They can get very gray. Let me talk about the positives first. Market maturity. It is said that you need market participants to be able to long and short a particular asset in order to get a true reflection of its price. Do we care about that? No, not really, I don't think. But it does make Bitcoin look more attractive to financial regulators who are looking for maturity in a market before maybe listing it as an ETF, for example. But most regulators have an agenda against crypto, so I'm not going to dwell on this point too long. Second positive is collateral. For places like BitMEX, when you open up any sort of contract, your collateral is always Bitcoin. If it was cash like the CME, it does nothing good for the price. But here you can only withdraw your profits or losses, as they may be, in Bitcoin. Even if you were trading Ethereum contracts, even if you were shorting Bitcoin Cash, it is eventually settled in Bitcoin, so that's pretty positive. However, there is a problem which starts to emerge, and this is somewhat of a identity crisis for Bitcoin, let's say. You see, when derivative platforms first started, they needed to use a spot price derived from exchanges that have much larger physical volumes. They decided to go with Bitstamp and Coinbase. It was the best way to stabilize their smaller derivative market, much smaller market in comparison, but they're getting a bit too big for that now. Being a victim of their own success, the derivatives market is even bigger than the physical exchanges, which begs the question, do you open a banana from the top or pinch the bottom? Let me know in the comments. If the vast majority of people are trading my more liquid derivative instead of me directly, what is the real underlying asset here? Who underlines who? What is my real price? Well, it's still whatever the last person was willing to pay for you, but the question only gets more pertinent over time. As volume increasingly moves over to derivatives and away from the spot market, it takes less and less money, generally speaking, to move Bitcoin. And here is where the word that we possibly can't go more than an episode or two without saying emerges again. Wow. This is exactly what we saw happen earlier this year in May on Bitstamp, where about 5,000 Bitcoin, or around $35 million worth, were instantly sold on the exchange, causing a flash crash. This makes no sense. That person immediately got wrecked when the price rebounded up. You know, if they were a little bit more careful, they would have gotten a lot better price. However, BitMEX uses Bitstamp as 50% of their Bitcoin index price, the other 50% being Coinbase Pro. The person who sold these 5,000 Bitcoin no doubt had an open short contract on BitMEX, high leverage. What an easy way to make some money.
Put your wallet in the bag. Put the money in the bag now. What you got?
But let me double back to that first positive mentioned before, collateral. The fact that your Bitcoin is at stake when you are leverage trading on these platforms means unless you are immediately converting into fiat when you are not trading, you are at least going to have some vested interest in the price of Bitcoin going up. simply because you are holding some. It is because of this, I can only imagine shorters in the market are doing so because they feel that they need to, but they would be more than willing to long just as soon as they feel that they can do so, and sometimes maybe even before that. And of course, manipulation works both ways. It can go down, it can go up. This is why I've always maintained a healthy dose of skepticism for both bear and bull markets. Things can change very, very quickly. So BitMEX is probably not a bad thing for the place, but it is contentious. The positives are that it gives people an opportunity to speculate further. Derivatives are a sign of a mature market. Eventually, everything settles in Bitcoin anyway, but we don't want it to overtake actual Bitcoin trading all too much. We don't want them to ever allow withdrawing your profits in cash. And who's to say, maybe Bitcoin's price would be higher if it wasn't for platforms like this. Maybe it would be lower. It's almost impossible to say at this point. But having said all that, BitMEX is far from a total positive on the industry. Going back to that website for a moment, most losing money, I believe it would be higher on places like BitMEX. But whether people choose to gamble their money like this or not is entirely their responsibility, right? Well, the interesting thing about BitMEX is that they updated their terms of service last year. They admitted that BitMEX has a market-making desk, a for-profit trading business that, among other things, transacts in products traded on the BitMEX platform. This is a conflict of interest. With all the data they have, with all the incredible volumes on their platform, they, as their CEO, Arthur Hayes, even admits, could engage in manipulative behavior, could front-run customers, could manipulate either the market on BitMEX or the underlying exchanges for the purpose of stop-loss hunting or causing cascading margin calls. I couldn't have put it better myself. Of course, this entire article says that they'd never do that. The defense is mainly, trust me, his integrity is unquestionable. But you know what? I do question it. I do. I'm sorry. I do. And my mistrust, I think, is well-founded. You can't run a business against your own customers and say, no, it's all right. We're not going to trade against our own customers. We're going to wear a blindfold while we trade and not look at all the information that we have. Okay. Story time. A few months ago, I was talking with a leverage trading platform. Not any of the big ones in crypto. It was actually more of a stock trading platform primarily. But I was talking to one of the co-founders quite a lot. They were interested in maybe signing me as a brand ambassador. Everything went sour, but it was very interesting listening to all the goings on behind the scenes. You see, derivatives trading platforms, leverage trading platforms don't give a damn about customer retention. That is not the business model. They know that you're more likely going to lose money, so the business model is to sign up new people constantly. It is also known as churn and burn. But I can't be too harsh. Margin trading is not a negative sum game. It is a zero-sum game where for every loser, there is a winner. Hypothetically speaking, it is completely neutral a space. But let me know what you guys think. I'm very curious to hear about your habits now. I want to do a straw poll. Let's do that now. What kind of trader are you? Accumulate and hold. Are you a margin trader? Or are you a big swing trader? Meaning that you trade on occasion, mostly prompted by big movements in the market. That's actually more what I am, but anyway. I'll leave a link to this below if you could let me know. That'd be interesting. Anyway, that's it for the meat of this video. This video is brought to you by Dole. Eat like a monkey. No, it wasn't, but I do have some sponsored coverage at the end of this video talking about the thing that everyone's talking about. Would you guess? Margin trading. Even Floyd is talking about this one.
All you got to be able to do is trade, and you'll win $1 million come in November.
So you may have already heard about Bybit's trading competition. This isn't a review of the platform or anything, just letting you know the rules and rewards. So Bybit is the fastest growing derivative exchange. No doubt their big sign-up bonus is a big component of that, but today we're going to be looking at their BTC USD trading competition. So first, some quick facts about Bybit. They've been around for over a year now, and they have already 150,000 users. They offer up to 100x leverage on long and short contracts. They have USD pairs with Bitcoin, Ethereum, EOS, and XRP. Bybit uses perpetual contracts, which has opening and closing fees like futures contracts, but doesn't expire as long as it's funded every 8 hours. Now, before we cover the prizes, these are the rules of the trading competition. First, only trading BTC USD contracts will be ranked. You must register between November 18th and November 28th with a minimum balance of 0.05 Bitcoin, which is about $400 with today's prices. The competition starts November 28th and ends December 13th at exactly 9 AM UTC. Lastly, you need to pick one of the available trading teams, which can't be later changed. So, onto the prizes. First of all, you get a participation bonus for joining, $30 for registering in the next 2 days, and after that, $10 for the last 7 days of registration until November 28th. During this period, there's 20% less taker fees during the competition. Most importantly, there will be individual and team awards for the highest ranking. Depending on the number of participants, the rewards pool will be up to 100 Bitcoin, of which 5% will go to charity. 100 Bitcoin at current prices being over $800,000. And if you're interested, there is a link to sign up below. But that's been it from me. Thank you very much for watching. I'll see you on the next one. If there was ever a situation where I was going to use this meme.
So basically, what I was thinking of was, oh, fuck. I can't believe you've done this.
This would be that time.